Hey guys, welcome back. In today's video, we are talking about the AMC SHORTBOOK exposed, the liquidation of shorts, the AMC synthetic ownerships, and many more in this video. First, we're taking a look at this. Still, no one seems to know how large that SHORTBOOK is. Could UBS acquisition of a major stake in AMC indicate the answer to, well, everything? And also give a hint of that ace up the sleeve of CEO Adam. So one of the things we talked about recently is how UBS has acquired a big stake of AMC. Now, one of the reasons why they could be doing this is because they're trying to cover the inherited short positions from Credit Suisse acquisition. We talked about the Credit Suisse collapse. Now, the thing we have to understand here is that, in my opinion, I do believe is that it's more of a hedge, because we have to realize that these short swaps, these short positions, if they have created synthetic positions of it, can't be covered just by buying the float on the market. However, there are ways that you can obviously prevent and minimize some of your losses by buying AMC. We've known that when AMC squeezes, it can go into the thousands, if not tens of thousands of dollars. And so right now, not only is UBS buying AMC, in my opinion, to cover or at least try and protect themselves from some of the short positions, but more importantly is to allow them to be put into a better position because of all the margin calls right now that they are having. If you take a look at this, another bites the dust. UBS just closed 2 hedge funds. The system is built on sand counterparty risk. It's a time-ticking time bomb. Trillion and quadrillion dollar fires are burning everywhere. When the dominoes fall, it could trigger a mass default and expose the entire corrupt system. So the reason why I'm mentioning this is UBS right now is in the midst of so many difficult situations. They're seeing the need to increase their margin requirements as proposed by the government. They're forced to shut down funds because of their involvement into bad investments, because of their risk exposure. So at times like this, you would expect UBS to carefully use their money. You would expect them to allocate their capital on things that will not only give them a return, but an extremely good return. And so it's why I said in times like this, where UBS is required to make the best decisions possible, the fact that they are buying a large stake of AMC should show you how they not only understand the potential in AMC, but also just how scared they are of these AMC swaps that they hold on to, and hence why they're obviously trying to buy. And it wouldn't surprise me to see them increase their positions in AMC in the future. But as of right now, like we've said, these are very bullish factors that are showing why people are buying AMC and why these big firms are buying AMC. You can also see here, UBS better reveal all those Credit Suisse secrets locked up for 50 years. What are the true liabilities? And so we have to realize is that, the fact that they're struggling right now isn't just because of the closing of these hedge funds. But if you dig deeper, it's what they inherited from Credit Suisse. And just like we've seen here from the start, we can see is that the CS collapsed, inheriting a massive undisclosed short book. And we've already known that in these short positions, it includes AMC, it includes GME. The only things we don't know are just how big these are. And so, yes, we're seeing them losing billions of dollars already on these hedge funds shutdown, but the bigger problem is how much they're losing from the Credit Suisse positions that they've inherited. And so you have to realize is that these shorts have been worrying for a very long time. And one thing to note is that UBS didn't even start this in the first place. And they aren't the biggest short holders of AMC. The ones that are way bigger, they are in an even worse situation right now. It's why we talked about the executive trying to leave Citadel. It's why we've seen this lawsuit recently. It's all pointing to the fact that these institutions have put themselves at extreme risk. As of AMC though, the next 6 weeks flips us into the biggest Q4 in 6 years. Last year, AMC generated 114 million positive free cash flow. On a Q4, around 200 million less at the box office than this one. 2026 looks to be a far larger than this year. You understand what's coming. I like the stock. And so we've just talked about this. We talked about how the shorts of AMC are not in a good position, but AMC themselves have positioned themselves perfectly. We've seen how AMC is very likely to improve their cash flow drastically for this upcoming Q4. But not only that, what this Q4 will show is how AMC will then work and improve in 2026. we're already seeing how AMC is improving quarter by quarter. And we are seeing how the box office is also getting bigger and bigger, and it's expected to get even bigger in 2026. And so when you combine all of this together, is why we've said how AMC operates, how AMC shows their Q4 results would also reflect how well they will do in 2026 and how much they will improve in 2026. And so you're seeing all of these shorts struggle, wherever it's Virtue, Citadel, UBS, all of these other short sellers struggle. But then when you take a look at AMC, you're seeing how they're improving and getting even bigger. And so this is why people are trying to buy as much AMC as possible. Is why we're seeing, companies like UBS acquiring these massive stakes. Another way to show, so this is not only to show the synthetics, but to show how institutions truly feel about AMC. You can see institutional ownership of AMC theaters now at 60.92%. So you can see here for AMC, the institutional ownership is at 60.92%. Now, immediately, your first reaction is, this is fake. And in my opinion, I believe that as well. But like we said, it shows two things. Firstly, the very fact we are seeing institutional ownership going up to 60.92 should already show you just how much and how desperate these institutions want shares of AMC. This is a massive jump in institutional ownership for AMC. The very fact we're seeing that 60.92, despite how all these media articles are telling you to sell, should really show you what the true value of AMC is. But then the second thing, which is talking about how at one point we saw 90% to 95 and maybe even higher, but let's use 90% for this example. We saw 90% of retail ownership on AMC. So that means that when you include insiders and institutions, there was only 10% available. And yet right now we're seeing that 10% go to 60.92. Now it is very likely that these institutions have bought up the synthetic shares of AMC. But the fact that they've bought so much of it, these brokers are forced to show in truth how much share there are and that institutions own 60.92. But once again, if we're talking about the real flow, if we're talking about how much AMC retail ownership really is, even with the existence of synthetics, I do believe we're higher, but it's the fact that these firms have to account for all of these factors and of course wanting to help out the institutions, they're showing the 60.92%, and we already know that that's obviously fake. And you have to see, if for this to be accurate, you will have to believe that recently retail has been selling shares in the $3 and $2 range after holding for years. It's most likely institutions are buying and have to show a greater percentage to reduce retail percentage, even if inaccurate. So this goes on to what I was just saying. And you can understand how ridiculous this is. Institutional ownership has always been lower in the lower side, never been more than 50%. And now, as we're seeing AMC at $2, as we're looking at the fact that the OBV is showing no one is selling, we're seeing how, what they're trying to say is that retail have been selling. So you're telling me that the very retail who have been holding AMC for the past 4, 5, going into the 6 years, have now started to sell for no apparent reason. And so from that, you really understand that these are obviously the synthetic shares that they're buying. They're just giving false data at this point. Now, another big thing that we've been talking about recently is obviously about the lawsuit. We talked about how Genius Group is obviously suing not only Citadel and Virtue, but also brokers as well. And then you can see that they're taking action against Robinhood and Fidelity, against brokers that ultimately removes the buy button on the company stock. And then you can see the effect that this is having. After threatening Robinhood with demand letter for removal of the buy button, Robinhood reinstates buy button for Genius Group stock. So this shows us multiple things. Firstly, is that these firms are worried when people take action, and you can evidently see it here. The very fact that we are seeing this happen should hopefully ignite something within AMC and GME. And once again, we've said this. This lawsuit is extremely important for us because of what it could do, because of what it would mean for the AMC and GME management. If they see that this is extremely effective, that this actually forces the regulation to take actions against these institutions, then AMC and GME, the ones who have been affected the most by these manipulation, would very likely obviously take the same action as well. And then you can also see another desperation. Now that GNS filed suit, everybody is scrambling to cover. Remember, the short sellers don't borrow shares to short. They borrow shares to deliver naked short sales from previous trading days. Otherwise, they'll fail to deliver. Now, we talked about borrowed shares already, and you can see that the demand for these Genius Group shares are extremely big right now. And it's very likely that it's the short sellers. And this is what we've said. These lawsuits, whilst they haven't had a definite result yet as of now, because we talked about this lawsuit is obviously going to take time, it's definitely already having an effect on brokers and on these short sellers. And so it's why we've said that we're keeping a close eye towards what this lawsuit does, because it could allow AMC and GME, like we said, to be in a better position if they were to do the same. And you also have to remember is that they obviously took action against Citadel and Virtue as well for alleged naked shorting. Like we've said, this is very important to keep close attention to. And you're seeing how the media article is trying to spin this the wrong way again. You can see that Genius Group, to protect themselves, filed a lawsuit against market manipulation, and yet they're saying it's negative. So once again, it's how news articles, it's how these media sites are trying to help out the institutions. Because how can a company protecting their own rights be negative for the company? And so this is why I've said earlier, these media articles who are telling you to stay away from AMC, who are telling you to sell AMC, they are all trying to help the institutions because they know that institutions want to buy AMC, and the only way for them to actually obtain these shares is for you to sell your AMC shares. Now, a big thing that we've always been talking about as well is how AMC will grow into the future. And one of the things we talked about is AMC raising cash. We've already talked about how Q4 is going to do extremely well, and 2026 is going to be even better. But another way for us to multiply that is by having understand the things that AMC can do. And you can see Adam has talked about dilution in the past as well. Biggest fraud of all. On dilution, some misunderstand or try scaring you. There's bad dilution and good dilution. If added liquidity gain from dilution is wasted, it's bad. However, if wisely handled, it is good. And so we have to realize is that we've already seen how this has done well for AMC. And once again, it isn't me telling you, what to do. Like we've said, none of this is ever financial advice, so do take advice against yourself. Make sure to do your own due diligence and research. But you have to understand how AMC has already shown that if they had extra cash, they are able to put it into good use. And now we're seeing this. US dark pools averages of 40 to 50%. AMC has a 6-month rolling average of plus 70% dark pool volume. So on the Genius lawsuit, we talked about is how they talked about how these firms use dark pools to hide orders. And this is the same thing as well, where we're looking at AMC to have an extreme dark pool volume, 6-month rolling average of 70%. So you should already see how ridiculous that is, and you should just understand how that would impact and affect the price of AMC. Now, let's look at this as well. Look at Hycroft right now, look at AMC. But then again, GME is not reflecting reality at all either. So we've known that AMC made an investment into Hycroft. If you take a look at Hycroft, they are doing extremely well. And understanding that, you would expect AMC to also show a reflection of that because of their investment in Hycroft. This points to two things Firstly, like we've said, if AMC does have more cash, they're able to make their good investments. Hycroft should be the example. But secondly, you should understand once again that the price we're looking at AMC is obviously not true price discovery. And you can see HYMC, Hycroft, is upticking and helping AMC's bottom line. So you would think AMC theatre stock is benefiting and upticking from Hycroft's price upticking? No. Wait, you mean AMC stock is going down? How is that possible? And so this goes back to what we're saying. Despite the fact AMC has shown how well their investments have done, how well it's going to continue to do, and that they having extra cash will put them in a better place, we're seeing how the market is trying to manipulate AMC. But not only that, it's another important thing is that at times like this, we're now seeing them manipulate and spoof HYMC. So this just to show you how worried they really are. The fact that they understand that HYMC will allow AMC's investments to get bigger, will put AMC in a better position, they're worried about that. And so at times like this, they're trying to short HYMC. they're trying to not only do that, but spoof HYMC. And we've already talked about this as well. We've already known that spoofing is obviously what manipulates and suppresses the price of a stock. And this is the very thing that Genius Group has also mentioned in a lawsuit. We've said that in previous video, in yesterday's video, that in the lawsuit, they mentioned firstly what we talked about, the spoofing, and then also what we talked about as well with the dark pools. And so you can understand that these tactics are now being used on HYMC just because of the fact it's affecting AMC positively. And so for that, they need to short it and so that it doesn't have a positive effect on AMC. Now, a big thing, the ultimate thing right now is that we have to understand is that hedge funds, brokers, and banks are in trouble. Citadel and Virtue were named in a lawsuit filed by Genius Group, which alleges naked short selling. Trump called for an investigation into JP Morgan. Robinhood, Fidelity, and other brokers are being accused by Genius Group of market manipulation, and there are so much more as well that's going on. And so this is what we've said there are so many signs and signals in the market right now showing how we are facing something extremely, extremely serious. And it's why we've said that a margin call, a massive market collapse could happen at any time. And you can even take a look from here. Every relevant amount borrowed from the Fed standing repo is a reminder that the liquidity in the financial system is not as ample and evenly distributed among banks as many people think. And so this is just to showcase one more time that these institutions are in desperate need of liquidity because the money that they've lent out, the positions they've put themselves into, the bad risk management are all showing right now. They are all showing and pointing to the fact that we could be looking at another 08 crisis, we could be looking at another Lehman Brothers situations, and they're trying to avoid that and they're trying to borrow as much money as possible. But we know that this is not going to last forever and that eventually something will happen. And so, it's why we've also talked about news. The New York Fed convened a meeting with banks over a key leading facility in money markets. Reuters reports there's worries of tighter market liquidity. And so for those of you who don't think that this is true, you can see how the regulations, how everyone is reacting to this, the meetings that are taking place just about the liquidity crisis. And we talked about how liquidity crisis obviously links towards the short as well. As always, this is Ever Financial Advisor. Do take a look at yourself. Make sure you do your own due diligence and research. And I'll catch you guys next time.